You may or may not have heard that there's been a budget, and that's going to affect you as a small business. So let's get straight into it and figure out exactly what this means for you and your business. Hello, my name is Aaron Patrick, the QuickBooks chap, and it'll be amiss of me to talk about not only the changes in the budget, but also how QuickBooks can help you mitigate against some of these new taxes. So let's get straight into it. First of all, there's been no major changes to income tax, VAT, or anything like that. So that's a positive, right? Not as much because first up, national insurance. The employers will start paying national insurance on worker earnings above £5,000, which is down from £9,100. Plus, the rate is going up from 13.8%, which was always annoying because it had a 0.8%, to 15%. So we've had an increase in basically how much it means for people to employ others, especially with the fact that there's going to be changes to the way we do benefits in kind going forward. This could be a really painful increase for anyone looking to employ people going forward. There is some good news for small business though. The employment allowance, which helps smaller firms reduce their national insurance bill, will raise from £5,000 to £10,500. That's one of the only bits of glimmer of hope we have of bringing new people on for small businesses, but realistically, it's still a real painful jump. 13.8% to 15%, especially with benefit in kind and all that sort of stuff being done on a more real-time basis. This is going to really hurt cash flow for small businesses. How can QuickBooks help? Well, make sure you use QuickBooks Payroll and QuickBooks together, because that way you'll be able to post all your journals together, and that's going to help you budget going forward. There's going to be a significant increase in the budget for you to be able to employ someone. So use the tools available to make sure that you stay on top of those costs. Another news, if you're selling shares, capital gains tax is set to increase from 20% to 24%. However, property sales will stay at the current rate. So it's good news for the property side of things, but 20 to 24% is going to be painful. There's a lot of people out there who use shares as a way to offset their savings, to be able to bring into some capital elements to it. It's going to be really painful going forward. In other news, the legal minimum wage is going up from April. It's going to be £12.21 per hour for over 21s. So plan again to pay higher wage costs. This again will make it really difficult for small businesses to be able to employ people going forward, and it's been an increase of a massive amount. So please use the budgeting tools within QuickBooks. Please use the opportunity to use forecasting in QuickBooks, because if you're looking to make your first hire, you really need to look at those numbers and make sure that it's going to be affordable for everyone. Corporate tax rates are staying at 25%, which is always a good news. And incentives for having electric company cars will continue to some extent until 2030. So it still seems like an electric car is a cost-effective way in some circumstances to be able to get some expenses out of your business. But the van benefit charge and the car and van fuel benefit charges will be increased from April 2025 using the September 2024 Consumer Price Index, which kind of to be expected. But it's such a shame that mileage hasn't gone up with the consumer price index as well. It's still the standard 45p per mile. That's not changed. That's not increased. So it's a little bit of a shame that we don't have that coming through as well. How can QuickBooks help you? Well, don't forget, QuickBooks is still there to be able to record your mileage as well. So if you do have vehicles in your business and you are looking to claim that all-important mileage costs, then the QuickBooks app is absolutely perfection in making sure that you claim for every little mile that counts. For me, that's the most important thing. And then finally, one bit of news that's kind of gone under the radar. That is the fact that making tax digital for income tax, it was MTD it's at one point, will be extended to sole traders and landlords with income over £20,000 by the end of the Parliament, which basically means that threshold for who's going to be covered for MTD ITSA or MTD-IT as it is now is going to be coming lower. People need to be ready for this. That means going forward, you're going to have to use software to file your tax return. And the thresholds at which you need to actually record your income going forward is coming down time and time and time again. £20,000 of income isn't a lot of income. And that means that quite a lot of the sole traders out there are going to be caught by this new regime. How can QuickBooks help? Obviously, QuickBooks can file for MTD ITSA. I'm part of the beta. I've been filing my income tax via MTD ITSA for a while, and it's working a dream. QuickBooks is also about to release a brand new product for QuickBooks called QuickBooks Sole Trader. I've been testing out on my channel, so come on over to Aaron Patrick, the QuickBooks chap YouTube, to see exactly how this new software works. I promise you, it's going to be mobile first, really straightforward, and it's going to be by far the best way to be able to get your MTD ITSA or MTD-IT file going forward. And that's it. What do you think to the changes? Let us know in the comments and follow for more updates on how this budget impacts your business. See you soon.